What's cracking, lads? We are back with the part two of the video as promised. I know it's a little late in the day, but it's all right. Just had a lot going on today, but we were back here tonight just to go over those trades for the day. I think it's really important for everybody to really backtest and journal the same day that they trade because it is definitely difficult to do the next day when you not only want to trade again, but you don't remember the trades that well, you don't remember the mentality, you may just be exhausted. So if you guys are trading intraday, like please go back journal your trades that day because it will save you effort and time and the learning process, right? So today we had a good day. We made 150 bucks. So I personally thought back then that you could see your trades filled in the day, even after market closes. But as you can tell, they do go away when they close. And in the past, this would be a situation where I would say, I remember kind of what my trades were. I'm just gonna jot down what I remember and just move on. I'm pretty sure I actually did that for yesterday because it was such a bad day. But having a really bad day is kind of different than when you're making real strides, real progress, and you want to backtest that stuff. You want to see what's actually going on. So yesterday is kind of an easy example of where you don't need a trade journal that much because there's not much to know except all the mistakes you're making that you're obviously going to learn from because of suffering through that mistake. But when you have good things happen and you can't see those trades anymore, please find the way to go back and journal those trades. And that's exactly what I did this time. Um, I realized that you can go here to orders, you can see your past orders, just click on filled, and boom, you can see the trades you did in the day. So I was actually trying to record myself journaling these down into the sticky notes, but it was taking a long time, and I had to take calculations and stuff. I felt kind of silly just sitting there going, "Oh, I'm trying to do math, right?" So, um, but this is how I usually journal all of my trades. So I always write, which contract it is, what time, how long, what kind, tick P&L, and profit or loss, right? That's how I write every single trade. And you want to be consistent like that because the last thing you want to do is go back and see journaling like this, but for every day, because that's not efficient. You can't just go back and, just remember something or go back and, just read an overview. If I journaled every single day like this, it would take me a lot longer to make progress than when I journal like this, right? So basically what happened for the day is, I was on 9:30, doing my charting and stuff that we're going to go over in just a second. But I missed a few trades actually. Like I saw so many good opportunities for trades that actually would have made me money, but unfortunately I wasn't able to catch them all, and that's okay. What's important though is that you see it and that you can write it down and that you can learn something from it, right? So trading is not always about just taking every trade you see. Sometimes just saying like, oh, this is a trade I would take, let's see what would happen, that could be progress, right? You don't have, like I said, you don't have to go green, you don't have to go red to be told that you're making progress or you're not making progress. Just doing it, it's like when you are trading on paper money, you're not actually trading, but you're getting the experience, you're putting in that effort, and it's kind of the same thing there. So I'm really glad I was able to find this. So if you guys don't know about this, now you don't have an excuse to not go back because I can literally go back to all of my trades and see everything. So there's really no excuse anymore for me to say, oh, I can't journal today. And I'm glad for that. And I'm glad I can show you guys that because now that's something I'm not going to forget. So let's dive into the charts. Right. I was looking for SMTs today, but I didn't really find any with ES when I was trading in the morning. So I'm kind of just going to toss this to the side just for today. But I just beware. I am looking for SMTs. I am looking for those. But most of the time it's just going to be out in the corner because NQ is what I want to trade. So as you remember the last video, all of my losses, all of my goofery was within those tiny little candles. So I'm just going to get rid of this now because we don't really care about that day. This blue line is for market open today though, and there's a lot of drawings in there, but I'm just going to let's just get rid of them for now. Let's make them not visible. If you guys didn't know this either, you can just click this, boom, can't see it for the 1 hour, clean, right? So market did open in this time frame here. So when I was looking back, I still had the same charting from yesterday actually, because my bias wasn't exactly wrong, and that's the difference I'm trying to make. I'm trying to make you guys understand too, is that just because my trades are terrible, just because my habits are terrible, doesn't mean that my charting was bad. Doesn't mean that my bias was bad. Doesn't mean that I need to delete everything and start over. Sometimes I will, because I feel like it was so bad that I just want a fresh start. But sometimes you can save time, you can save effort, and you can continue building on your good habits by keeping some things that worked, right? So this is the kind of stuff I was charting, because as you know, I'm always looking at the 1 hour first. Part of my recipe is look at the 1 hour, see what sell sides are taken, see what buy sides are taken, look at the range we're working with, and guess what? It's still the same exact range, right? Only one day has passed by. So for the 1 hour, that's really not much. So over here, I recognize that we kind of had a buyer maker model. I believe that's what it's called. Correct me if I'm wrong, but turtle soup is what Justin calls it. I wanted to call it that, but I don't want to be stealing people's lingo. But as you can tell here, we have accumulation here. It manipulates to the down, and now we're moving up. So I just know we're bullish for the day. I know we took our sell side recently. I know I want to take those longs, right? Because that's going to have extra oomph when they really go up, right? So these were all drawings from yesterday. I really wish I was taking trades there, but again, you can't do perfect every day. I don't even think I traded Tuesday, so I'm getting bummed out about something that I wasn't even there for, right? So it's unnecessary. So let's drop down to the 15-minute now. Oh, whoops, that's 15-second. 15-minute. Now we're going to see all the drawings I have here. So some of the first things I was drawing when market opened was the sell side here. I kind of lumped them together because I think I overemphasize on having each time frame have a sell side slash buy side, and I don't think that's really necessary. So I kind of try to switch it up today and say, they don't need to all have their own thing. Like they can have the same one, because sometimes the action is just moving together. The time frames are lining up, right? And that's a good sign to me. Now that's something I can, think that like, oh, maybe that's not so bad, right? So when the market opened, immediately took that buy side liquidity. I remember on that losing day yesterday, I drew that as a 15-minute buy side. Now I'm just going to have as a normal buy side. Essentially, what I really thought was a 15-minute buy side today was also taken. So basically, all of the buy side recently was taken as soon as market opened. It was a huge, huge jump. Um, and I had that 15-minute sell side there because that was pretty much wasn't pre-market low, but it really was the low right before market opened. So as you can tell, we do come back and take that low later, but when I'm looking at market open, I'm not really worried about any lower than that sell side, because for it to, immediately come from here to down to this sell side, for example, would be a situation where I don't need to be trading, right? So now we can drop down to the 5-minute. We've done enough on the 15-minute. I saw at 9:30 how bullish it was, and when something like that happens, when you see two 5-minute candles like this, I'm sorry that the frames are probably so low when I'm scrolling and stuff. I'm working on getting a better platform to stream my screen on, but I'm gonna try to not move it too much. When you see two 5-minute candles like this, where in 10 minutes it moves literally from 90 up to $100 up, you definitely should not be trading instantly, right? Because you have no idea what's going to happen. Everyone might be thinking, oh, let's take shorts, and you may make some money. Well, guess what? You have terrible habits. That's a terrible habit. You don't know what's going on truly, right? So when this happened, I kind of just stepped back and said, wait a minute. I purposely left all of my charting today because I wanted to see how I would react to going back now and trying to, fiddle through everything that I had. And this is the absolute most I will ever chart on a day and leave. Because, like I said, if I came back earlier to make this video and to, describe what my trades were, what would happen, I'm sure it would be very fresh in my mind. But this is a good example of why you don't need to overclutter your charts, why you don't need to wait very long to journal, and why it's not so important to keep everything that you chart in a day, right? I remember what most of these are from, but not everything is super absolutely important. So I'm just going to get in the 1 minute here, though, because I'm going to try to explain everything. I'm just going to delete things as I go, as I find them unimportant. So I remember this 1 minute sell side was here, because, again, the 5 minutes down there. So if we were to take the sell side pretty quickly, I would say it's in the 1 minute. And then here I said 1 minute/5 minute buy side because we've just been going up so much. I already know that this is going to be liquidity that's hunted later, right? So the first thing I'm looking at here is this range wasn't up here. I only put it up here because of this high. So we're just going to ignore this for now and actually delete it because I don't think we need it. The only thing I was really paying attention to with that fib retracement, if you guys don't know what this is you take the low of a move and you place it on the high, and if it was going to continue in that direction, we should see it retrace to discount. And this is when you want to get into the trade. This is why I say if you see it go all the way up here, you shouldn't be longing for sure. And you shouldn't be shorting because you don't know what's going to happen after this yet. But if I really think we're bullish because of what I saw in the 1 hour and because of what I saw in the 15 minute, then I'm going to wait for this to get to discount first, and then I'm going to take a trade, and then I'm going to look for an entry. So when it was right here, you see how it's going to come closer back into discount? That was what that's for. So we're going to get rid of this now because this is definitely not necessary. This was the only SMT I drew today. So you can see there on ES it did take that low while this didn't take that low. So that's pretty bullish to me. So this reconfirms that fib retracement I drew, and that was when I saw my first trade opportunity go by, right? So in the past, I probably would have been tilted. I probably would have been like, oh man, I missed that trade. Like, I'm done. Let's take this next trade. I'm glad I didn't because this was the next trade I thought that was good. And I don't think I took that either. I think I missed that as well. So I missed two trades in the morning that both clearly made money, both clearly had my bias behind. Um, you see this fib retracement here goes back into discount again. So that's what this fib is for this moment right here. So I'm going to delete that once again. But you can see here that order block, pretty bullish, right? So because we go down, we make the SMT. We don't take the low, but we do make an SMT. And then this order block basically gets touched on and we go back up. Here again, I think that's another order block. No. That's a fair value gap right here. And it gets pretty much respected, but this is not, this would have been like, if I were to take this trade, this is why I put my take profit here because I'm not going to place it up here, right? This is just a little too unreasonable. We see a fair value gap here that's definitely going to have something happen. So this is a good example of when you don't exactly know where the take profit is, choose a safe one, right? Don't choose this. Don't go for a mega runner. Go for something where you know you might have some resistance and where you can safely take some profit from. So this is why I was especially bummed out that I didn't get this trade because I felt like I was really just surgeon. I felt like a surgeon seeing this, right? So we're gonna get rid of that now. One trade missed, no problem. Our biases are being confirmed. This is nothing but building confidence for when I actually take my trade. That's how you have to see this, right? You can't see it as like, oh, I'm missing money. You have to see it like, oh, I'm doing things that are right, right? So we're gonna get rid of that too. I have a fair value gap here from the 1 minute from when that very aggressive move happened on market open, and I was actually expecting it to come here. I think that's why my trade actually wasn't taken because I genuinely thought it would have came all the way down here. But as you can tell with this fib retracement, that also was an incorrect bias because if we're going to come down to discount, coming all the way down here is pretty low. Like I'm already surprised that it came this low, right? And at the same time, that's why I'm also glad that I wasn't in that trade. So as much as I'm sad that I'm not in that trade, I would have been stopped out if I took it right here, right? So that's not the trade that I really was identifying though, but I did recognize that if I wanted to take a trade for that using this fib, that I would have actually been stopped out. So that's why this first trade, especially that I identified that would have made me money, kind of actually boosted my confidence for the day because I avoided a bad trade that I would have definitely gone stopped out from. And I identified a good trade that I could have made money from. So to me, that's a double win, right? So continuing on, now I'm definitely paying attention to the charts. Now I'm definitely going to continue charting aggressively, waiting for my opportunity to come in. Um, I don't know exactly. These will come in later into play. So the next thing that happens that's significant to my charting is obviously this fair value gap gets tested, and it looks like it's getting disrespected because it did close above it. So you guys have to know if you're wicking above it, that doesn't count. But if you're closing above it, you're absolutely getting your fair value gap disrespected, and that's why I cut it off right here. So that tells me again we're further bullish. It doesn't mean put a long right here and let's rise to the sky, right? No, it means wait for a better entry, but know that my bullish bias is being confirmed. So now we go here, identify the next good trade, because I'm pretty sure here I dropped to the 15-second. Because something that I feel like is part of my recipe as well is like when I feel like I'm missing a trade on a higher time frame, usually to me that indicates on a lower time frame we may replicate that same model and continue in that direction before we kind of hit a reset. So that's what I did here. I drew a little 15-second fair value gap. I'm pretty sure the other one was a 1-minute fair value gap. So I'm pretty sure this is the contestant of that bearish fair value gap. I do not know why every time I'm changing the chart, it's just on a completely different time. So we come back here, right? This was our fair value gap, the bearish one, got rejected, but disrespected. It did. This is the difference. This is something very important to identify. The fair value gap was disrespected, but it still held, right? So there's a difference. Like we're still bouncing back lower because we have to, because the market has to generate that liquidity to go back up. It has to scoop all of those stops before it decides to come back up. But at the same time, we still know we're still bullish, right? So that's the big difference. If I'm going a little too fast, just let me know. But I'm trying not to just blaze through everything, but I do have a lot to go over. So here's our 1 minute. Gets tested. This is another example of a trade I'm glad I identified that would have made me money, but I'm also glad that I didn't take, because again, I have two fair value gaps and I knew I wanted to take the trade on this one. But look here, it's at 46 and usually my risk is only $9. So if I went down to 37, it would have been really close, a really, really, really close one. So I'm glad I didn't take this either, because the 15-second time frame can be really unforgiving when it comes to those wick outs, and that's really what makes NQ such an efficient index to trade, because it just knows what to do. It's super good. It's super volatile, high volume. It's art, bro. It's just art. That's how I see it, right? So another trade, I missed it, but I'm glad I didn't take, right? So further boosting my confidence, further giving me more price action that I can be confident in and then later take a trade for. Right, so we had a little buy side here. That was definitely a 15 seconds since I didn't label it. We bounced up, took that little buy side, and we actually took the 1 minute and 5 minute as well. That was something I was surprised of. That's why I drew this next fib retracement, because I said to myself, I thought I was only going to take this and maybe do one more rebalance and come back up. That's what this fair value gap was here for. That's what I remember for sure, because I wanted it to come here before taking this liquidity, but it pumped so hard because of how low it went. Again, the market is so algorithmic, it knew exactly what to do. Not only did it go too fast for some people to catch in on the opportunity, but it took plenty of stops along the way. So up here is the top of the range, here's the bottom. So if I expect it to come back into discount again, it'll be somewhere around here. Here's a fair value gap, further confirming that. Again, confluence. If you guys don't know what areas of confluence are, it's basically things that are matching up with what you're thinking, things that match up with your bias. I'm already bullish on the day for the high time frame. I already saw two trades that went positive longing because of my PD arrays, because of everything that I saw being confirmed, right? The bearish stuff being disrespected. So again, it's another opportunity I'm looking for. So we can delete this now. We do retrace, we do hit it, and I did want to take a long here. I think this is 1021, so let's check if this was a trade that we actually did take. 1019, so this was a trade I did take, and I took it right here. So we touched the fair value gap. I had my wrist down here. We tapped in and we went up, but guess what? We didn't hit my take profit. This was my intended take profit, and the reason why I only walked away with $50 was because I did two good things, right? If you want to guess what they are right now before I say, go ahead, take a second, pause the video. The two things I did that were good, though, was one, I followed my risk with the trade, right? I saw it go positive, and that confirmed my fair value gap here, but that also means that we shouldn't come back into it. We shouldn't be bouncing straight down into it like we did here. And that's why I was taken out of this trade, because I put my stop right at break even as soon as I saw this bullish confirmation of this fair value gap. So when some things don't make sense to you, they don't have to, right? All you need to be doing is making sure you're practicing your good habits. And for me, one of those is when my trade's going green, we need to move that risk up, because there's no reason for me to lose all the money that I was willing to in the beginning when my bias was confirmed, right? If something happens and it goes the other way, that's not my problem. My problem is making sure that I don't give away everything I just earned. And that's what I did. So I'm glad that happened as well, because again, it's just building confidence, building good habits, right? So this was unfortunate that we didn't get to take that small internal liquidity, but no worries, right? So that's gone. Now this fair value gap is invalidated essentially because we're testing it a little too much. I'm going to wait for more action essentially. So that's exactly what I do. This line is what actually indicated my break even, my adjusted risk. So it wasn't even down there, it was up here. That's why I was positive only a few dollars. Normally I would just scooch it over to break even, but as you can tell, we wick even lower. So I'm glad my instincts told me what to do, and I'm glad I followed them, because that's exactly what you're going to be relying on every day you trade, are your instincts, your intuition, right? Your habits. So boom, we can get rid of that now. This retracement is going to be after we touch that low, because this was a moment where I was questioning my bias. I was like, I made money on a trade, but it didn't go the way I wanted. So we got to sit back and we got to wait for some price action, and we got to reevaluate the situation. So we have here what I believe is a 15-second fair value gap, bearish, obviously. This calendar thing is getting kind of annoying. If you guys know how to prevent this issue, please leave me a comment. But yeah, bearish fair value gap gets tested and gets accepted, right? So this was exactly what I was looking at. And I should have had not the discipline, but I should have had the instinct to know that sometimes I can flip my bias and still make money on a day, right? I shouldn't be longing again when this long doesn't go exactly how I want. But at the same time, it doesn't mean that I can't find a new opportunity. It doesn't mean I can't momentarily flip my bias to catch this price action that, I'm hope that you're aware now that I'm following very, very, very closely, right? So if I really think I know what I'm doing, there should be no problem with me seeing this kind of fair value gap getting respected and just taking a quick little short. The only thing is I didn't know exactly where I would have put my take profit, and that's why I think I really didn't take the short. So again, it's just analyzing yourself, man. You just got to keep looking at yourself. You got to keep questioning yourself. You have to understand why you're doing everything you're doing. Okay, so this gets respected, goes back down. I see a bullish fair value gap here. I'm pretty sure this was on the 1 minute. And again, we're just going to be going through this nonsense. So what happened here was that it was a bearish fair value gap, right? And then it gets disrespected. So I had it as inverse. And what I actually wanted to do here is I wanted to take a trade. And let me check here really quick again. 1029, I took a trade, right? So it's because I thought this inverse fair value gap was going to hold. And so I took a long right here at 1029, and it didn't last very long, 2 minutes, because it immediately went down, right? So this is a really good example of sometimes not rushing into a trade. So sometimes you can find a good time to flip your bias, for example, with that bearish fair value gap. But this is an example of why you don't want to continue with the same bias when stuff starts getting disrespected, because you don't know what's exactly going on. So that was actually my mistake here for the day. I think that would actually have been my only true mistake on the day, was being a little too hasty, having my bias get disrespected and me not taking enough time to sit back and realize that I should have actually switched my bias if I was going to trade at 1029, right? It's not about my bias being completely wrong. It's about time and price, right? So at this time, the price would have been much better on a short than on a long. And that's a good takeaway I have for the day. Even just making this video, I'm realizing that as I'm saying it, right? So that's why it's so important to journal this stuff, guys. So this gets disrespected. This kind of like led me to the end of the day saying like I don't really like inverse value gaps that much. It's just because I'm not experienced enough with it. That's really the truth. Because I'm sure people are out there making more money than me using inverse fair value gaps when they should be. But since I don't have the experience, I can recognize that I shouldn't be charting every inverse fair value gap and using it for a trade. So that's a very important takeaway that you guys can also make when you're charting. So we come down here, hit the low. Now at this point, I'm thinking we're bearish, right? So I saw this mistake. I didn't make that analysis then, but I did question my bias at the moment and said we're still bullish on the day, but now if I want to make my money back for the day, number one, I need to size down. That's what I didn't do yesterday. And number two, I need to wait for price action one more time to really give me that confirmation that I should take this short. And that's what I did. We drew our discount. We saw it come back in. I'm pretty sure we had a PD array as well. I think it was a fair value gap, maybe. I think this was the fair value gap I had. Um, Actually, I did have a dry. I think I just deleted it earlier. It wasn't that one. Actually, it was this one. So this one got disrespected and I lost a trade, right? I literally just said a minute ago I didn't like inverse fair value gaps. I shouldn't be using them all the time. But guess what? I used it correctly literally a few minutes after I used one incorrectly. So again, I'm making a video on it and now I'm just realizing more and more what I'm doing right and wrong, and I'm furthering my progress. So I use one wrong because I didn't flip my bias according to time and price. Now I have a bullish fair value gap that gets disrespected. And now that I know we're kind of bearish in the moment, now I can use this accordingly, also with a fib retracement, get back into discount, touching on that wick, and make some money. So this is a beautiful example of when you're not wrong all the time. You just need to be patient and you need to step back and you need to analyze yourself to realize what is wrong about what you're thinking. And that's what happened here. So I'm really glad that not only was I able to take a moment, step back, question my bias, adjust, and re-prepare for a trade, but that I sized down. It's literally so hard for me to even say. Like it's almost blasphemy for me to even say that I sized down. But it's so important, and this is why. I want you to imagine that you only give yourself 2 trades in a day, right? And on the first trade, you're going to go your full size. You're going to do 1 mini, right? Regardless of if you win or lose, you're always going to be losing your max risk and you could potentially be making your max profit regardless, right? On your first trade, on your max size. Now, I want you to think about, most people will walk away after one trade. I know I'm not that guy. But I also know that I shouldn't be doing the same size because if I win a trade and then I do the same size and I lose a trade, well, I just gave away almost half my progress on the day, right? And at the same time, if I lose my first trade and I'm still hungry, I still feel like, I got this. I can make a winning trade today, which is what happened here because this trade really wasn't that much of a win. It was just good risk management, right? It was good. It was discipline. It was good habits. This was a loss, right? This was truly my loss on the day. So on my third trade, I knew that even when I lose on a trade, I don't want to be on the same size because imagine losing twice on the same size. Now you're basically just losing one full profit, one full take profit of the same size. Like if you're doing a 1 to 2 risk, let's say risk to reward, that's essentially what you're doing. You're taking 2 bad trades and forcing yourself to make a third good trade with the same exact size just to make up for that. Guys, that's a bad habit. I don't know if many of you care about the mathematics of it all so much, but the one thing I obsess over is the math. There's nothing I can ignore about the math of that. You don't want to be taking 2 bad trades and forcing yourself to have the same size to make it all back on your last trade. Because guess what? What if you lose the third trade? Now you're down 1.5 of one good trade at your full size. That's terrible. So that's why I say when you do your first trade of the day at your full size, never, never, never do a full size again. Because now look at it this way. You have one big trade, right? Let's say you make money. Now when you size down for your next trade, if you lose money, you lose a lot less. You don't give away all your profit for the day. You don't even give away half of it. That's terrific, right? And if you make money again, well, guess what? You just added to it. That's a beautiful day, right? And then on the other hand, if you lose your first trade of the day full size and you size down accordingly and you make the money back because of that 1 to 2 risk to reward, this is the beauty of trading is we don't have to win every single trade. We just have to be consistent. So now on that second trade where I size down, if I have a 1 to 2 risk to reward, I can lose my first full size trade and I can make it all back with my sized down second trade. And that's exactly what happened here because I was negative on the day. I should have been more negative on the day, right? But because I sized down and because I was able to make these adjustments, I was able to adapt, I ended up finishing positive on the day. And that is exactly why I think I had such a good day today. All right, we're back. Sorry about that. I reached the record limit on Clipchamp. Um, as I was saying, I was scared during this trade. I remember what happened. Like I was already so unfamiliar with sizing down in such a disciplined way. I was unfamiliar with the inverse fair value gaps. Just making me lose money on a trade. And then at the same time, it's so conflicting when you have something that should lower your confidence, but at the same time, you're working on keeping your confidence constant during the day. So, like, I had some conflicting things. And so, when, I put my risk accordingly, when my trades start to go right and, we kind of have some resistance, you get a little bit scared. You get a little bit iffy. You get antsy. Like, I have this 15-second fair value gap here. And we're really contesting it. We're I remember on this candle here, we were on the verge of disrespecting it, and that's what really scared me because usually on the 15 second, as soon as your PDA rate gets disrespected, it's boom, they're flying away. So I was just scared of what was going to happen on my first trade, where I was adjusting my break even, I was adjusting my risk, and I thought I wasn't going to walk away with as much. So I remember being a little bit iffy here, and instead of me having my take profit to down here like I should have, this is definitely what I should have done because here's three differences, right? This is three examples of being too overconfident, right? Of being the right amount of confident and being not confident enough, right? This is overconfident. You thinking that this is just going to happen every time. It's a 1 to 6 risk to reward. You're either a monster or you're crazy, right? This is an example of being the right amount of confident. There's a sell side right here. Price wants to go there. You're a little iffy on your PD array, you're a little iffy on the confirmation, but you know in the back of your mind that you should be sticking to the trade you believe in, right? And then this is an example of what I did and of being a little too underconfident in your abilities, is just playing it safe, right? And I still walked away with a very good trade, but this is a moment where it's very good to analyze yourself and to see those three differences, because you will learn in the future, you will recognize this moment and you will say, oh, I remember when this happened this time, I'm not going to let it happen, right? So either way, though, again, this is why I think today was such a win, because first trade, we prevented loss, right? We set our risk. We walked away with something positive, good, right? Our next trade was good as well. Even though we lost money, it was good because I was practicing the charting. I was on it. I was feeling confident. I missed 2 positive trades, and I still didn't let that affect me. I let that build my confidence, right? And I took a loss, and that's okay. And I think that's a good trade still, because then on the third one, I sized down, right? I continued to try. I didn't let that waver my confidence. And I was able to bounce back from using an inverse fair value gap incorrectly to using it correctly. So again, and that's because I adjusted my bias to time and price. I know I'm still bullish, right? I know I still want to see price go up, but I have to recognize that in the moment, that's not what it's doing. And that's why I think today was such a good one for me. So after this, I walked away from the computer. Like I said earlier, we probably were bullish for the rest of the day, and we did. This is the AM. Sorry, not the AM. This is the rest of the PM session. It's a little slower and stuff, but as you can tell, we did go back up, and we will continue to rise up, I imagine, until tomorrow, and we will see what happens. But guys, that pretty much wraps it up. I know I yapped a lot about that charting, but I was just so excited to have such a locked in day where a lot happens, good and bad, and that no matter what, I'm walking away improving my recipe. I'm walking away remaining accountable. I'm walking away continuing to build good habits. And last of all, I walked away positive on the day. So I hope you guys learned something from this video. I know it's a little bit long. Hopefully my next trading days won't be that long, because my next trading videos won't be so long, because I'll be able to record the video a little bit sooner. So hope you guys have a good rest of your night/day, and see ya.